Hello, Oracles. How's everyone doing? Sounds like my voice is finally fully back. Almost there. I got a little bit more to go, but I'm feeling much better now. So hope everybody had a wonderful week. Of course, today the markets were closed for the funeral for President Jimmy Carter, um, and tomorrow they open again. And tomorrow could be a rocky day. We're going to start the day with the unemployment report. That's going to come out before market open. Actually, let me just double check the time we get that. I think that's 8:30 in the morning. I'll double check for you. But but that's where it's going to be. 8:30 in the morning. We're going to get that. So that's how tomorrow is going to be, and being just kind of like a 1 day trading day. Usually going into like long weekends, you may see some uncertainty. People sell off because you don't know what's going to happen over the weekend. So now here we are going into tomorrow, and we're already sitting at a 32 in the fear and greed index. So we could push further down into extreme fear, or maybe we bounce up. Again, tomorrow is going to be very uncertain, and the jobs report is really going to kind of dictate how the next month is going to go, and then some. So obviously the next month is going to be very questionable. And it's going to be, the unemployment report tomorrow, CPI next week. We've got the inauguration, and we've got earnings. So the next month is going to be quite a bit insane. Yeah, Alex, the jobs report, yeah, it's the big one. And of course, we got some jobs data earlier this week as well, which the market didn't like because to some people in the market, it kind of signaled we may be hitting stagflation, which I don't think that's the case. And the reason that people thought that was because it looked like we had a lot more sales that were going on in the month of December. But I think a lot of those sales that are coming out in the month of December were companies purchasing a lot of things ahead of what we might be seeing for tariffs coming out from Trump. And so they're making those purchases, and it kind of skewed the data a little bit. And those purchases may end up leading to maybe some deflation in the future in the next couple of months if they don't end up selling those things and they've got to do some markdowns on it. So what's going on, Lang? So we just got to pay attention to the jobs report tomorrow. And again, the next month is going to be wild. So for me, how I've set everything up, and I'm not one. I've been shifting my mentality. I've been reading. I don't have it in here. It's in my bedroom reading. I'm reading Rule One, and Rule One really kind of breaks down how to value a company, how Warren Buffett values companies. The guy who wrote the book, Phil Town, he focuses more on growth stocks, but the principal fundamentals still remain the same, regardless of what your focus is on how to value these companies. And it doesn't matter what's going on in the macro environment to be able to value a company. And we've talked about it before, where a lot of companies, most of the time, the stock price of a company is not going to be the correct price for whatever the intrinsic value of that company is. So what you need to do is find out what the intrinsic value of the company is. And a lot of it is based on growth rates. And it's something I kind of inherently picked up on a couple of years ago. And this book here kind of puts the whole formula to it. So now I can utilize my thoughts and put it together with this. And it's about growth rate in a lot of different areas. And if a company is growing, regardless of what's going on in the economy, obviously recessions and things may slow that down. But if you see consistent growth rate in a company, you can now see a trend and a value for that company. Then you take a look at the price that it's currently trading at. And it's either going to be trading most of the time either to at a premium or at a discount. And then you kind of have to factor it from there. So again, very rarely are you actually spot on the value of a company when it comes to the stock price. So you look at the intrinsic value and its growth rate. So I've always been a fan. This is why dollar cost averaging has been successful for people, because when you dollar cost average, you see a company that's growing, and you dollar cost average into a good growing company, even if you're paying a premium for it, typically over time, it will inevitably reach the price that you paid for it intrinsically, and then you've made your money on it and you're good. And then, of course, over time as well, you're going to get discounts, and it continuously fluctuates. So it averages out to about the intrinsic value over the long term, which is why long-term investing is always going to be more successful for most people than swing trading and things like that. Then, when you start to figure out how to value a company, you can then focus on more about purchasing at discounts. And you can say, hey, I recognize that we're trading at a premium right now. Maybe I want to buy some treasury bonds like my dad is doing, or maybe you want to keep it in a high yield savings account and keep your money growing there and differently, waiting for those discounts to show up. So that's kind of where I'm shifting my knowledge and focus, is learning how to figure that out, to figure out where these companies are at a premium or at a discount. And in process of all that, we can do that with Tesla as well. Now, Tesla, as far as a lot of different accounts go, it's trading at a very high premium. And now Tesla's always traded at a premium, except for the last couple of years when we went through, the downturn. But it's always been at a premium. And even some people can argue that even during the downturn, it was still at a premium. But this is where it comes down to, what are the growth rates? And once I do end up getting through this formula, figuring all of that out, I'll share that with all of you guys as well, because I'm going to do it with all of the companies that I own. This way I could break down the formulas that I found and the growth rates on everything, and then we can figure out the valuation based off of just those metrics. And I may end up doing that because I know I told you guys I would do future retirement videos on Tesla, when you can retire on Tesla. So I think I'm going to switch over to this formula for valuation. And once I do that, I'll be able to let you guys know, and I'll do a new video for that. What's going on, Hanif? So looking at the market right now, again, coming back to today's situation, is the jobs report. So going back to where the stagflation was, that's where the issues were. But I don't think that's the case. And then tomorrow's jobs report. And let me just do an update on this to see what the expectations are for the market for the jobs report tomorrow. Why is this not letting me update? Let's do this. There we go. All right, so tomorrow's jobs report, we are expecting, the expectations are 155,000 jobs, holding steady at a 4.2% unemployment rate. Hourly wages are what are the expectations? I'm sorry, this is very strange how it's just laid out here. Retirement, no. There we go. Okay, that's just the forecast. Okay, so the forecast is 155,000, and then 0.3% on hourly wages, whereas previously it was 0.4%. So we're expecting wages to dip down a little bit, and then hourly wages year over year. So they're basically expecting it to stay the same. So we'll just, again, see what the jobs report came out, and diving deeper into it is really going to give us a better idea of what's truly going on versus the headline numbers, because a lot of times the headline numbers, obviously that's going to move the market one way or another initially. But then once people finally dive into the weeds of what's going on in the jobs report, could give us a better indication of what we can expect going forward. And so that's really going to be the question. Now, cryptocurrency today has been tanking as the day goes on, because cryptocurrency continues to trade whether the market's open or closed. And so that's been tanking today. But looking at a lot of the levels, and I'll bring up Webull in a second. Yeah, exactly, Alex, and kicking off earnings season. So with everything we've got going on, the next month could potentially be wild. And I mentioned it the other day, and somebody actually on TV, I can't remember who it was, had mentioned the same thing, that we might see a similar outcome to 2022. And it's something I had mentioned, God, probably two or 3 years ago, in a video where I was relating the market to a rubber band. And when you have a rubber band and you pull it and you let it go, it bounces, and it bounces back significantly, but then eventually it bounces less and less and less and then evens out. And I think what's going on with the market right now is that's basically what happened with the interest rates. When the Fed cranked up interest rates as much as they did, that was basically pulling the rubber band. Now they've let it go and they're starting to have it come down. So now we're kind of swinging. So we swung down really hard, and that's when we hit the rock bottom, and we had Tesla dropping down to $100. Then we swung back up to where we are right now. So then now it's going to be swinging back down again, but it won't be swinging down as far as it did before. And we just kind of have to rubber band our way back to even again, and then we'll be in a steady place, but it's going to take some time. So I think that's right now where we could potentially see that rubber banding down and see a massive market pull down this year. And again, we may not fall down as far as we did before in 2022, but we could still end up seeing a big correction. Maybe Tesla comes down to fill that 146 gap, and then we come up from there. And that's the new very bottom. But it's still, when you look at it over a long term period, like the 3 years, you're looking at a 146 as a higher low over that long period of time. So that is still a very long-term upward trend, but it's going to seem like a lot of pain, but it's still an upward trend over the very long term. And that's kind of what we'll look at as far as that goes. And that's kind of, a thought that I'm having and why I've kind of played my portfolio the way it is, if we catch this downturn, it's going to stink, but we just had it in 2022. So we've learned how to operate during that. Of course, nobody knows exactly how it's going to play out until it actually plays out. But if we start to see signs like that, and it was right around this time that we started to see that downward trend. Now, this time around, we basically peaked on Tesla at the middle of December. It was December 18th was when we hit that peak, and we have been on a downward trend ever since. So I don't know when that downward trend is going to do. I'll bring up the charts in a second for you. Loading up in cash. So I've hit, sorry about that. I've hit my my 12.5% cash that I want in my portfolio. And now I'm just using my cash to purchase cash flow. And that's where I'm at. So 12.5% cash is kind of where I wanted it to be at the max. And then I'll just continue to buy some more things from there. I've contemplated going up to 15% cash, but my portfolio to me is still small enough where, I'd rather have more money invested than not, and just, learn how to value these companies. And if I, see opportunities, I'll buy it. Just be more wise with my purchasing, and just hold it at that 12.5% to keep those opportunities there. Because that's one of the big things that I've learned over the last 5 years of all of my investing is I always want to be able to take advantage of opportunities. And the worst feeling I had, other than selling at the top or picking a loser and taking a loss, is not being able to take advantage of buying opportunities. Looking at the really successful long-term investors like the Warren Buffetts of the world, they've always been in a position where they could take advantage of opportunities. They were very patient and waited for those opportunities. I was not patient until now. And now, granted, maybe I should have 30 to 50% cash. I don't know. Nobody knows for sure. But again, my portfolio is small enough where, I can recover from it. So yeah, exactly, Alex. Yeah, when it tanks and something's on sale and you can't buy it, it sucks. Especially when you have a smaller portfolio and you're like, man, I really wish, like I could make a major difference in my portfolio if I could buy at these levels, but I don't have any money to buy at these levels. So damn frustrating. So that's why I've changed my whole mentality. I was very strict with myself and very disciplined on not buying every single opportunity that I had, changed my strategy. Now I have tons of opportunity. I've got the 12.5% cash. I have over $500 a month coming in from dividends that I can distribute as well. So I have plenty of money that I have floating around, moving, coming in to be able to take advantage of these opportunities. Now, I can't just go out there. Like, for instance, right now, my portfolio is telling me to buy about $900 worth of stocks, but some may be overvalued. I don't care in that regard for what I'm looking to purchase, but I don't have the $900. I'm not just going to go and dump $900 into my portfolio because I don't have it according to my strategy. I want to keep that cash, so I'm holding that. But if we get some dips, I will pick those things up. So as I have cash flow coming in above that 12.5%, I will then go ahead and spend it. But let me bring up these chart here for you. Because if you guys didn't see the video I put out this morning, I'll kind of go over it a little bit again here. Let's see here. There we go. All right, so looking at the charts here. So again, Tesla here, we talked about it last week where we were looking like a dead cat bounce, and sure enough, here it is. Bounce, bounce, and now we're coming down again. So the levels I'm looking at here is we're now at the 394.94. And from here, tomorrow is going to kind of dictate, are we going back up or down? I can't foresee us going sideways really. Well, I guess if we come in as expected, maybe we do. But looking here, the levels. So we've been making lower lows and lower highs. So the question is going to be, are we going to fall down below this 378 level, or are we going to be coming up above this 422 level? So those are the two areas I'm looking at right now. So we're kind of in the middle of them, and we just follow from here. And again, I don't know which way we're going to go, but knowing that we have all these gaps down here below us, whether it's now or later, I think we are going to end up coming down to fill these gaps down below us. Now, again, the RSI is right in the middle at 50, so we theoretically could swing either direction. But knowing how the macro is in fear mode right now, maybe we stay disconnected. Again, I don't like to play the predictions. I just like to show you guys what I'm looking at as far as the map goes and what the things are laying ahead of us, and the different ways it could play out. And again, if we go into tomorrow's unemployment and tomorrow's unemployment ends up not doing well, we come down. Then we end up getting CPI next week, and maybe inflation is kind of giving us more of a fear. We pull back down even further. Then we get the inauguration. Then who knows what Trump is going to do for all the executive orders. Then all of a sudden we get executive orders, and then we could pull down further if that scares the market some more. And then, of course, we're in earnings season. So much going on that could move us one way or another. And again, a lot of times, all of that uncertainty, the market doesn't like. The market's not going to like uncertainty, so it's going to take itself and put itself on the sidelines and just wait it out. And by the market taking money and putting it out on the sidelines means that we could end up pulling down because there's no buyers. There's nobody buying in those markets. They're just waiting. And the people who buy end up being retailers because retail investors are like, ooh, I'm buying the dip. And then it just keeps on dipping. And again, there's nothing wrong with that. I was doing that during Elon selling, and I did very well dipping down on that. People who were doing that for the last 2 years on Tesla did very well also. So, it's one of those, do what's best for you and your portfolio and your investing thesis. But just be aware of the fact that uncertainty is something that brings the market down significantly. And we have a lot of that going on over the next month. What's my Q4 energy predictions? Actually, I don't know, Alex. I'd have to take a look. Knowing that we came in at was it 11? Was it kilowatt hours, gigawatt hours? God, I'd have to. Oh man, it's been so long. Let me take a quick look. See here. IR Tesla. I apologize if you guys hear my tenant's dog barking. Adorable dogs, but she had an issue with one of them today, and a neighborhood dog. Horrible dog owners are not cool, man. I don't like them at all. Love dogs, don't love bad dog owners. Let me see what we got here. All right, so what was it at? Oh, energy. Oh, 31. Why did I think 11? I must have read that wrong. So deployment was 31.4 gigawatt hours for energy. Now again, energy has been significant. Actually, you know what? Hold on. Let me bring this up for you guys. You can see it here. Pop that off. Do this. Let's see. Perfect. All right. So 31.4 gigawatt hours deployed this quarter. But let me take a quick look. See here at the previous quarter. So Q3. I thought they had meant, 6.9. So significant jump quarter over quarter when it came to energy deployed. So then if we take into account the 6.9 gigawatts, let me see the shareholder deck and we'll see what energy brought in for revenue. Energy storage revenue came in at 2.3 billion for revenue. I don't know if did they break down energy profits? Because I know profits are huge, but if we had 2.3 on 6.9, so 2.3. Actually, how am I going to do this here? So it's 344 times 31. I mean, if we're basically let's say we're quadrupling the revenue that's coming in. So we're going to go from 2.4 billion. We're looking at probably $10 billion in revenue from energy deployed. And if that's going to be the case, if that's how it's going to play out strictly based upon those numbers, which actually we can dive into previous ones as well to see if that is how it played out, because I don't know if they showed. So they had 9.4. So they actually went down in energy production, then back up. But if we do this and we go to the shareholder deck here, let's see what they brought in for energy revenue here. All right, so they brought in 3. Okay, so it's roughly close. So for every 3 gigawatt hours of that they deploy, it was about $1 billion of revenue. So yeah, so we could be looking at roughly $10 billion of revenue. So if that's the case, you look at revenue coming in from automotive, I mean, that's half of it. So, I mean, that's a huge chunk. And as far as I know, margins on the energy are actually higher than automotive. So we could see a shocking surprise number when it comes to profits, and energy really making an impact on the bottom line. So it will be interesting to see how this plays out. Um, so yeah, so the predictions, I'm going to go with, if the numbers are correct and just, the absolute rough math that I was just doing right there, we may see $10 billion in revenue coming in from energy this quarter, which is completely wild. Again, being half of, like, Wall Street wouldn't be able to flinch at that anymore, because that's half of what we're seeing for automotive revenue. Um, so, again, if we end up seeing a flat year, which Troy Tesla thinks we might see, basically a slight uptick in deliveries this year. And his logic is sound, and he's really, really good in understanding the numbers and what's going on with the company and the business. So seeing as how it's all playing out, we may very well end up being in a situation where, the Model Q comes out realistically beginning of the second half of this year, and it's a much higher price. Again, we have to find out, is Trump going to get rid of the EV tax credit? That's going to make a big difference. The cost, we know, is going to be higher than expected. So we're not looking at a sub $30,000 vehicle unless you factor in the EV tax credit. So Elon did say we are looking at a 30% year over year growth in vehicles. I would love to see it. If we do, then great. If not, we end up being flat year over year, and energy continues to grow the way it does. We may see energy getting close to matching that of what we see for vehicle revenue. And I know I mentioned it a couple of years ago how, probably by 2027, I think I mentioned it in one of my prediction videos, where I thought by 2027 or 2028, we could possibly see energy eclipsing vehicle revenue. And that might actually come to fruition. And it wasn't because of and of course, at the time, I didn't think it was because of the fact that, we were going to be basically sideways in deliveries, but maybe that's how it plays out. We'll see. Let me see what else we got going on here. So yeah, that's really it for what's going on. Let me see. I'd be curious what happens to the stock price just getting FSD approval regulation alone. So just like anything else, it's going to be a sentiment swing. So the sentiment would end up popping it, or if we hear like murmurs, because you'd probably end up hearing about how Congress is going to be voting on whether it's going to get approval or not. And so the rumors behind all of that would probably end up driving the price up. And then when it actually gets approved, it would end up selling off. That would be my guess as to how that's going to end up playing. But then what's going to end up settling down to is, well, what's the actual revenue generation coming in? So let's say it happens, April of 2026. We'll all of a sudden get this approval. Okay, cool. We've got the approval. Now, where are we going to be at when we actually see revenue coming in from it? What are those revenues? So we have to wait for the next earnings, the next full quarter earnings that would come out. So probably be in July. So you'd see July and say, all right, well, what changes happened in the revenue? What really transpired? And of course, if it's 2026, we then have to look ahead to, our cyber cab still on the docket for coming out the next year? Is FSD actually solved? So you can still get the regulation before FSD gets solved because you've got the Waymos and things like that. That could end up happening as well. And then you say, all right, well, where are we at in all of this? And then it's really, again, going to come down to what revenue are we bringing in from this? Because the revenue coming in is really what's going to make a huge difference, because that's what's you're buying a company for, is the revenue they're bringing in and the money that they're bringing down to the bottom line. And again, going back to the growth I talked about of valuing a company, that would obviously help with Tesla's growth. But if you don't actually have the revenue coming in for that FSD to show the growth, then it hasn't been helping yet. Very similar to like the AI right now. A lot of companies are making investments into AI and their infrastructure, but they don't have the revenue coming in to support that yet. It's coming down the road. We're just not there yet. So very similar to a Tesla and the FSD, you'll get the sentiment swings and things like that. But at the end of the day, when you end up rubber banding back down to where it should be from an intrinsic value standpoint, you're going to be looking at it and say, all right, well, we still don't have the revenue coming in yet. When are we going to get there? And then what's the margin on that revenue that's coming in? Again, having Waymo out there and having other companies that are doing this, well, there's going to be a race to the bottom. Is Uber going to have a fleet of their own? Because if you have driverless vehicles, that's less money that you have to pay out. So you can realistically have Uber having full robotaxi fleets out there. You're going to have some people who just don't want to drive in a humanless vehicle. So they're going to pay basically a premium to have a human drive them, which is fine. But eventually over time, it's going to, weed itself out of there. So it's just a matter of, what's the competition looking like? And once you get the race to the bottom on the pricing, then who's actually making the profits? And again, you may see a lot of expenses coming ahead, and it may not be as profitable of a venture as we think initially. I think it'll get there over time, but I think initially it may be a negative, a net loss. Happy New Year, my friend. Raymond, Elon yesterday said expect a few thousand Optimus bots deployed to Tesla factory this year. A few thousand, really? I must have missed that one. That could go mass to 50,000 next year. Wow. I mean, a few thousand. I mean, obviously, we've been seeing the progress that they've been making on those. Big progress on them. And of course, as FSD grows, that's the same technology that's going into Optimus. So huge there, and I'd love to see what they're actually going to be doing in the factories. And the big thing is going to come out is, and I don't know if Tesla's doing it or not, but are they putting together a cost cutting chart basically of saying, hey, we've got Optimus doing these jobs, cost human labor X number of dollars. And with Optimus, we save X number of dollars by doing that. That's going to be the major piece that they're going to be able to utilize basically as advertising for other companies to purchase Optimus when they get to that point and say, hey, in our own factories, we saved 60% of labor costs by having these Optimus bots in our factories. Do you want to save 60% labor costs? Very similar to what Palantir is doing when their algorithms are calculating out how companies can run their businesses and saving them a lot of money on their bottom line. And so Optimus can theoretically do the same thing. So if Tesla and Optimus can do that, then that'll be huge. So seeing a couple thousand, that's I was not expecting that. That's huge. My duplex tenant, are you house hacking? So sort of house hacking. The house is not technically a multifamily, but it was set up as a sort of multifamily. There's like it's like a multi-generational house. So there's like an apartment kind of set up in the back that I live in, but there's only one kitchen. So we have a shared kitchen right now. So I am going to have a kitchen installed, and then it'll become, and it still won't ever technically be a duplex because I won't set it up that way. It's still going to have one meter and one everything else, but I can split it up and have two different tenants in here. So it's like advanced house hacking, we'll call it. And then 10x again another year. I mean, hey, if they're going to go that fast on the sorry, still clearing that throat out. If they're going to go that fast on Optimus, that's awesome. And again, that's where Elon sees them going, and Optimus being the largest piece. That'd be huge. Would be huge if they start deploying Optimus within the factory. It would save massive amounts of money. Yeah, street house prices, and that's again too is what's the bottom line going to look like for Tesla? So you start seeing that bottom line growing for Tesla. And then, of course, you see that deployment going out to other companies. So it's going to be a win-win for Tesla because they're going to see improvements on their own bottom line. And then when they do start selling them to other companies, then it's more revenue on the top line as well. So huge, um, huge implications coming for that. Why isn't everyone going cray about the possibility of Optimus bots becoming firefighters? The government will pay for all the major cities to have them. That's actually a great thought there. Obviously, especially with what we see going on in LA right now, which is awful. Um, that's a great thought. Having them do that. There's obviously a long way to go for them to get to that point where they can go in there and actually make some differences. But if they can, I mean, obviously it's be a lot less human interaction, or even if you had them as a remote control style um, setup where they can be controlled remotely to go in there, whether it's going into to grab people who are in harm's way. That to me, just right off the bat, would be a huge one. Forget about even putting out the fire. You've got tenants, you've got pets, you've got animals, whatever it is that need to get rescued. Send in an Optimus bot to rescue them. They can go in there, they can get the people, get them out safely without putting another human's life in danger. That's huge. That's a great idea. You know, I haven't even thought about that. I don't know if they've been thinking about that, but man, protect our borders and have Optimus stand guard. I mean, then we start getting to that iRobot situation, or even like an Iron Man 3 with the dome around the world protecting people. It's like, eventually you find like where's the freedom balance there, and everything is, not to say it's not a good idea, but you're starting to toy with some edge case scenarios that could get ugly. Let's see. No water. Well, I'm sure the Optimus bots can handle water. I don't know how much, and I don't know what kind of heat they could take either, but I'm sure, technology can get them into high heat scenarios where they can take the heat without a problem. Others will create robots to attack Optimus Border Patrol. Yeah, exactly. That's what it comes down to. Very much like as they discussed in the second Avengers with Vision. I was second. No, I think it was Civil War. Whereas, the more things you put out there to protect you, the more someone else is going to want to build something or find some way to get past your protections. And it's just kind of this upward spiral. So you kind of want to be careful with that. Yeah, imagine seeing the world when we start seeing robots just in our daily routines. Wonder how far we truly are away from that. 1,000 years history books will reference time period. Seriously, and again, I personally think something like that is at least 10 to 20 years away. Maybe in 10 years we see a couple. I would say in 10 years we would see Optimus in the wild, sort of like when we started seeing Cybertrucks in the wild earlier this year. It's like, ooh, I saw one. That was pretty cool. That I think is what we might see in 10 years. Over the 10 years, I think we're going to see some great progress. I think we're going to see them, obviously in Tesla's factories and other companies' factories as well. So people who are working in factories will probably see them on a more regular basis in that scenario. But I think, the only ones we're going to see in the next 10 years in the wild would be like maybe a celebrity like the Kim Kardashian has one, or, some other celebrities have one, maybe as a cool thing that they have around the house, but maybe not taking it out in public per se. Um, but maybe in certain areas they can do that, similar to how, Teslas were most prominent, obviously in California. And, those are prevalent there all the time. But you go to other places in the country and Teslas can be very rare. So, it could be something like that as well, where Optimus is, commonplace maybe in those higher upper echelon areas like the Californias of the world. And then it just is going to take some time to kind of go around the rest of the country. What do you think of military contract in the works for Optimus? I think it's inevitable, sadly. We already fight a lot of our wars with drones as it is right now to keep um, human interaction out of it, to keep them out of harm's way. So there's a lot of drones doing it. So it's just a matter of time before you have that. But like, so what point do we end up getting to the fact that we're going to have And I don't ever want to see this happen. We just have armies of robots out there. That's just silly because, again, that's leading us to like Terminator type scenarios, and I want nothing to do with that. Using it for, uh, you know, uh, positive functional growth in the world, I'm all for. Um, but I don't want to have to ever see that. And unfortunately, I think we will get that to that point, but I'd rather not. Why doesn't Governor Newsom drive a Cybertruck? We know the reason there. Yeah, Governor Newsom should go the route of Justin Trudeau and step down. Just my thoughts on that one. Lockheed Martin was doing a lot with military robots. Haven't heard from them. Their stock dropped a bit, but hanging strong. Yeah, I mean, Lockheed Martin obviously is that government contract for military stuff that's always going to do well because without fail, the government always wants us to be at war because it's another reason for them to tax us more and take our money. Drives me absolutely insane. Maybe things will change. I don't know. Yeah, Newsom is anti-Elon. Yep, and as we're seeing, Meta seems like they're going to be moving to Texas also. So we'll see what happens with that when Meta goes over to Texas. But it sounds like some eyes are opening, and we'll see how things go forward. Yeah, Jimmy Carter was awesome. I mean, he wasn't one of the best presidents that we've had, but for what he has done for the community, and I think he probably did more for the community maybe after his presidency. And I don't know enough about it because I wasn't alive during his presidency. Maybe I was, maybe for a short time, like when I was like one. Um, but I mean, what he did for the community to help build houses and everything. I mean, right up into his 90s, the guy was awesome. So good on him. So it was sad to see him pass, but 100 years old, he lived a good life. Definitely leaving behind a solid legacy. Yeah. Anybody feel empty with the market close today? It was so weird. Especially having the last 2 weeks, we've had Wednesday closed and short days on Tuesday, and we've got Thursday closed. It's basically 3 weeks in a row of split trading weeks. So weird. So next week's gonna be the first full week that we've had in basically a month. Um, so again, with what we've got going on tomorrow, it's gonna be very, very very uncertain. That's what I'm going to go with is uncertain tomorrow. Um, I'm ready for whatever happens. I'm ready if the market tanks. I'm ready if the market takes off. That- I'll just react accordingly according to that one. Anything else going on? Let me see. We've got that. We went over that. Tariffs, CPI next week is coming out. Actually, I don't know if typically Sunday is when we get the CPI data. At least the expectations. So I don't think that is in here yet. Next week, so we get PPI on Tuesday next week, and then CPI on Wednesday. It's one of those weird times where PPI comes out before CPI, and no expectations yet for CPI. So last year, year over year, here, I'll pop this up for you. So CPI year over year, that's gotta be year over year. That's weird. That should be month over month for 0.3. So core CPI is looking at a 2.7. Why does it say it this way? That's so weird. I don't like this one. Hold on. I'm gonna find the other one for you. I normally don't use that one for my CPI. I use a different site. Investing CPI. There we go. Much better. All right. So many pop-ups. Jesus Christ. No, I don't want to do that. Oh my Lord. Get out of here. This is ridiculous. All right. So looking at CPI for, let me see. Yep. So month over month was 0.3. So again, no forecast coming in. So last month was 0.3. And then let's see, year over year. And then year over year was 2.7. So 2.7 and point 0.3 are what we saw last month, and then we'll just have to see what the forecast comes in at for on Sunday evening. So I'll have to see, because normally I do my recordings of my videos on Sunday morning. So I'll see if it's out at that point, and I'll mention it. So PPI we should definitely have, because that's coming out Tuesday. But I'll try, if it's out, I'll put it in my what to expect video on Sunday. Find it weird more people don't care about the markets. It's a ticket to freedom. And that's the whole thing, Alex, is man, I've talked to so many people about that recently. It is capitalism. If you understand how capitalism and money work, then you can succeed. But unfortunately, the job of capitalism is to get you to be a consumer. And because without consumers, capitalism wouldn't work. So they need the majority of people to be consumers in order for those who are owners to make that money. It's just how it is. So people who have learned how money works no longer are consumers, or they are consumers second. And that's kind of where I'm at right now is, I was just watching a video that I actually posted in my stories on Facebook, which is if you are you only spend the money that your assets are bringing in for you. So obviously you've got to pay minimum bills, but I basically live a minimalist lifestyle in order to put the most of my money into my assets. And then the point is, over time, those assets will be able to pay for my even minimalist lifestyle. And then I can continue that snowball growing. And as that snowball grows, I can build more assets. As those assets grow and I get more assets, I'll have more money to come in. And then I don't have to live the minimalist lifestyle, and I can kind of grow off of that. But the longer the more money I spend on things that aren't going to be generating revenue for me, the longer it's going to take for me to get to a point where I don't have to work. And once you understand how all of that works, then yes, Alex, that's how the markets work. Whether it's the market, whether it's interest, just money in general, once you recognize how that functions, your life changes entirely. My whole mentality changed. Now, money for me going out is I relate it to my health and fitness, because for me, my health and fitness, I look at food. When I'm consuming food, previously it was like I'm consuming food because it tastes good. Then I realized, food is fuel. That fuel that I put into my body is going to help me feel better, be stronger, perform better, live longer. All of those things, that food is the fuel. So money is the same thing. Money is going to fuel your wealth. And if you're giving yourself the right fuel and putting it in the right places, then you're going to be benefiting yourself longer for the long run. And you're going to have much stronger wealth going forward. And it's a much healthier wealth. And so it's just a matter of utilizing your money properly. And that's what I'm trying to educate people on with my website and talking to people about all of that. And I should have my update. My website's up and running. If you guys want to check it out, it's oraclehealthandfitness. That's my old one. It's just oracleinvestments.com. You could check it out. I do need to get it updated. But I do consultations for free. I was talking to one of my vendors today at work about how much free stuff I do, because for me, I'm all about helping you guys build your wealth. I've got my channel here. I make a few bucks off of this. Through my website. If somebody signs up with SoFi, I make $75. You make $25. I can make my money by helping other people out through billion-dollar companies. And so I don't mind, making a little money from billion-dollar companies so that you guys can have better results. I'm cool with that. If you want me to spend more of my time to really dial in specifically on your needs on a regular basis, then I'll charge a very small fee for that, because that's me dedicating my time to that. But for my basic knowledge, for stuff like this, I want to give you guys free information to do this. I want you guys to succeed. My true success is your success. So, if you guys want to check out my website, go ahead, give me some feedback on it. Again, I've got to do a pretty significant update on it. I'm working with my developer right now on it. But that's really what I'm all about, man, is just helping other people out and creating win-win situations where I can win on my own. And it's so hard in this culture where people are thinking that everybody's out for themselves. And I'm like, Sure, I am going to succeed in this. I will. I am going to benefit by helping others, but I can do so in a manner where you benefit also. And it's not me being greedy, and we can both win. Those situations do exist. And I'm just trying to create as many of those as possible. The mechanics of gaps and how the general rules 9 out of 10 gaps get filled. My question is, of those 110 of the gaps that don't get filled, are gaps where the stock gapped up or down? It's both. Goes in both directions. Typically, if you've got a good company that is growing, every gap above is inevitably going to get filled because if your company, unless it's going under and sinking, if the company is growing, it is going to get filled because inevitably, even looking at the dot-com bubble where we had basically a lost decade, you go out 13 years and it took 13 years, but those gaps ended up getting filled in most of the bigger, better companies. So it does take into account both. So that's, yes, it would definitely, I count 10 gaps. And again, it's not an exact science. But just looking at the reasons why gaps fill and why they're created, I take a look at, that's why I see so many gaps for so many companies, even the indices over the last year. And I'm seeing a pretty good clean out coming to fill those gaps. My shoes are literally falling apart. And if you spend the money on new ones. So my point with this one, Alex, too, I'm the same way. My shoes that I have are basically my hiking shoes, and I use my backup or my I'll buy a new pair to go hiking with, and then I'll use my old pair as my work shoes and things like that, and my just kick around shoes. I actually have through United Healthcare, I can earn up to $1,000 a year by working out, taking steps, sleeping well, tracking a bunch of different things. I can earn money, and I earn those gift cards, and I take those gift cards and I'll buy new shoes with them. So things that I'm okay and I'm good with investing in, especially when it comes to your health, shoes. So I don't let my shoes get too far gone because that's important for your health because it could cause hip problems, could cause back problems. So definitely make sure you're wearing good enough shoes. Don't let them get too beat up. A mattress. I'm guilty of this one. I definitely need to get a new mattress because mine is not good. It is old, beat up. I have a topper for it to soften it, but I definitely need a new mattress. So investing in things for your health are definitely worth it, and shoes are one of them. So my recommendation is definitely make sure that that you've got shoes that aren't hurting your back. So invest in some shoes. It's okay, Alex. I'll give you permission on that one. Yep, eat to live, not live to eat. And I'm a huge foodie. I love delicious food. Um, you know, that's one of the things for me is just food. I will eat it all day. I'm actually looking forward to Saturday. I'm going to treat myself to some sushi because I haven't had it in a while. Um, but even when I go out to eat food like that, I'm still going to, stay within reason, or I don't do it often because again, going out to eat things like that, it costs money too. So it kind of balances out. So the more food I want to eat, the more money I have to spend. The more money I spend, the less money I have to buy assets that are going to bring in more money in the long run. So it all kind of works in a synergy with each other. So you spend less money and you spend money on good food. So make sure you're buying good quality food. Don't starve yourself. So buy good quality food and that'll be good for your health. And you don't have to worry about spending money later on down the road on healthcare. For the most part, obviously it's not always exactly like that, but it minimizes that risk significantly. So make sure you take care of yourself there. Honey, if you guys want to succeed, hit the like button. Yes, thank you, honey. If yes, hit that like button, share, subscribe. I appreciate it. You guys are the best. But on that note, my voice is starting to go again. I need to continue relaxing that. Again, you guys always awesome. Love these Thursdays, and I should be back on schedule. And now my son flew back to school yesterday, so I should be back on schedule Thursday night live streams and my regular viewing schedule for all my other videos. But otherwise, thank you guys so much for being here. I love hanging out with you all, and I will catch you guys